Hey guys, for the people just coming in now, this is my price prediction for Bitcoin. I believe that we have broken the 48, 47 and we're doing a small dead cat bounce on this line. I believe we will go further down to 45k, where we'll have a slight upwards momentum, and then we will go down all the way to 41. But we should see a big bounce up back at that point. Do I think Bitcoin is bearish? For the moment, yes. Do I think the bull market is over? No, not at all. And I do believe we'll have a full recovery, but it might take a time frame of about a week. Okay, cool. That was for the quick one. If anyone wants to skip now, I'll be deep diving into hard analysis into why I think the Bitcoin model works like this and how I was so accurate on the 18th of April in predicting this price movement while the market was rising up at that point. So the best thing we got to do is to look at what Bitcoin has been doing. How did I come to these levels? I'll answer that first. So before Bitcoin reached its all-time high above 40,000 at this point, what we had here was a nice consolidation level. We had a resistance of 41 to 40,000. As this wasn't broken, it went up and it broke it again. And this was, I think there were a few catalysts at this point of Elon Musk buying Bitcoin. There was a few other things that came up at this time which made Bitcoin rise even further, but this was what solidified the bull market that we are in right now. So this was the absolute support where a lot of people are betting that Bitcoin will go down to before recovering. This is kind of seen as a standard support barrier at 40k, where if Bitcoin drops below this price range, we are entering in a bear market because the next support would be around 30,000. Oh yeah, 29 to 30,000. So the reason some people are saying 45 is because the yellow line signals a consolidation level. The consolidation level is usually what a price tends to fall to once it has broken its top support, but tends to bounce back at that point. Right now, this is the day chart. If we go to something like the let's see if the 4-hour chart shows it. So we can see here that on the 4-hour chart, we bounced at the 48,000 line, went up slightly to about 50,000, and now we're back to a downtrend. I do believe that this is not a solid line, a solid support for us to focus on. I believe that we will drop further, and I'll show you also why I think of that. My kind of price prediction for this is, as soon as the major drop here happened, there was some big technical indicators which show that the market as a whole will have a price dip. That's why I've stayed cash heavy. I've stayed about 60% cash heavy. Now I'm about 80% because I've pulled out of some trades at this point. It's very good to always stay cash heavy and invest at dips. Investing at dips will probably make you more money than investing into good opportunities you see, because the multiplication factor of it is astounding. Okay, so let's answer some first questions. So why don't I think that Bitcoin is going into a bear market? Well, we have this great chart called stock to flow model. A stock to flow model is a kind of statistical model which can show whether a asset or commodity can halve, and that's what this chart technically shows. So the line in the middle is the prediction for Bitcoin so far, and this has been pretty accurate ever since 2012 all the way up to predicting about 2030. Now the prediction for the stock to flow model this year is that we should reach 80,000, and that by next year January we should be 100,000. So that should be the solid prediction for the stock to flow model. That's on the 463 day average. Now if this doesn't meet it exactly, then I won't trust it as much, but it has been pretty accurate. Now the whole point of the stock to flow model design was that our price range should hover below and above the line directly. As soon as we have it going above and below the line but following the trajectory, we should still be fine. We are seeing a minor correction here, which has happened before with Bitcoin multiple times. In a bull market, what you should expect is a 20 to 30% drop. Once we go over the 50 to 60% drop, then we start getting quite worried. In 2017 we had 6 drops between 30 and 40%, but this got corrected quite easily and we had the all-time high straight after. To go a little bit further in depth into this stock to flow model, this chart is by Digital Ignite, but it quite portrays the similar method. So the stock to flow model, the price moving average should be this, and Bitcoin should hover around above and below. Once we entered above the 40,000 range, we basically met some of our targets quite early. So we were supposed to be at the stage where we're about 50,000 at this point, but we've already hit 60,000 way before. So if we just line this up, we should have been at about 45 when we hit 60,000. Right now, we're exactly at the line. So I expect Bitcoin to move down all the way to about 40 and then move back up. And that's how I kind of made up my range to kind of solidify this. We can see here by the price movement that this is correct. These are just one of the indicators. Using the stock to flow model is kind of like very assuring to make sure you're still in the bull market. This was my chart about 18th of April, signaling that we will have a bigger dip. The first dip that I predicted was about 48, about around here. I predicted a higher high, about 50,000, but it went up to about 50. It still could today push up as of 23rd of April, but I believe it will go down further, and we'll have this kind of similar trajectory to about 40,000 before we have another spike up. That's why I stayed cash heavy ever since. There's also a few catalysts which contribute to this. So for example, we know that in Biden's tax plans yesterday, he vowed to double capital gains taxes, which could affect investor sentiment. And one thing as well about this, so the tax hikes could contribute to the psychology of the trading of Bitcoin, because with trading as well, there's a lot of psychology involved. Big investors try and hit stop losses, they try and shake out short-term traders, and people do take profits at this stage. Now, when we try and do a comparison, what I like to do is I like to add two different charts. So this one right here is the Bitcoin's dominance chart, right? So this shows how much investment has gone into Bitcoin compared to other altcoins. And we can see that has recently dropped, but was at an all-time high. One more chart I like to add is actually the crypto index chart. The crypto index chart shows how much investment in crypto in general has been done. Using these three charts together on top of the Bitcoin chart can give you a very, very good indication of the price movement. Okay, so just to go over this, so we can see here that when Bitcoin dominance went up, and the capital index number goes up, we can see a solid price movement. But when Bitcoin dominance tends to go down, but the capital investment goes up, we can expect a solid move down. So you can see here, what this means is that more people are investing in cryptos and not as much in Bitcoin. So we can see a price signaling down. We can see that here as well. So for example, when Bitcoin dominance went up and the capital investment went up, we can see a solid upwards movement trend. But then when capital investment goes down and Bitcoin dominance is still high, Bitcoin controls the market at this point. Now here it's lost quite a lot of control on the market. So, but what is happening in the last 2 days is that Bitcoin dominance has started signaling up. So what this means is that we should find a downwards, something similar happening here, where essentially we'll have basically a price movement of the capital index down, Bitcoin dominance going up, have a little consolidation. So this is basically the stage we're at now, where we're about here. We should see a drop even further and then slowly pick back up like this. And this was my initial prediction for the Bitcoin market as a whole. When comparing these two indicators, I think I just removed the Bitcoin index. Let me just add that back again. So what we should see here is Bitcoin dominance picking a little bit back up because there's scared investors into not investing into Bitcoin. They're finding a very good deal, a very good entry point between the 45k and the 40k range. Bitcoin dominance should start picking back up, and then as soon as we break another all-time high, right, Bitcoin dominance should drop, and we should still see a better floor than this. When this was about the point of 30th of March, when people were indicating the start of alt season. But one thing that was quite concerning to me is the rapid drop in the all-time high here, and then the rapid drop in Bitcoin dominance, and then it slowly starting to pick up. At this point right here, this was a very good indicator that the market was about to crash. Next time this happens, when you see a high capital investment and Bitcoin dominance starting to pick up, it just shows that people are wary of altcoins and tend to want to drop it and want to reinvest back into Bitcoins. And you can see this pattern reoccurring multiple times. As Bitcoin dominance start to pick up, we see a downwards trend afterwards. But hopefully with this reversal, this is my explanation of why I think it will hit 40k going into depth. I've shown you the stock to flow model, which can be used to kind of determine how Bitcoin goes and where we're at right now. In retrospect, we're still very bullish. Like I said, if it drops below the 40k range, that's when I will be withdrawing all my trades for now, because it will signal a bear market. But yeah, with crypto, if you're quite new to this, one thing you should expect is 20 to 30% drops. That's very normal. The best way to make money off crypto is, like I said, investing at these drops. But make sure before you enter into any leverage trades that you look at these two charts and identify kind of what you need before entering these leverage trades. Is the market looking like it's going to go down? If it is, then do not enter leverage trades. Instead, you can try and enter shorts. This is not financial advice at all. This is just my opinion only. And yeah, thank you for watching.